home, pin a song, call a chick, get some dome.
Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is September 27, 2019. Shout out again, last song from G Esperanza on YouTube, song called Vanity by Blue. Hope you guys enjoy that, and welcome again to another episode. Today we're going to be looking at the DAI Stablecoin. I think that's how you say it. It was hit by Ethereum congestion, and actually that congestion ended up making the price of the DAI token, which is a stablecoin, crash. I tweeted out yesterday, this is why people need to stop deving on Ethereum. It's just not ready. Not saying that it won't ever be ready, but when you have a situation where, and I know they're trying, they're migrating from proof of work to proof of stake, and the whole ecosystem of gas and needing to use gas to make transmissions or transactions on the blockchain. I know we're getting away from that when we upgrade. However, that's 2 years out. And so in the meantime, I don't know why people would be deving on this network. I think, honestly, Ethereum might end up just being a type of currency. The ETH token literally just being a type of currency. It's pretty useful for that, even though with a lot of the blockchain 3.0 platforms, even that token won't be superior. Like, we can move EOS tokens, Tron tokens, Telos tokens, all these other quantum. You can move all these tokens with a blink of an eye, literally as fast as an email, and not have to worry about that. But anyway, we'll take a look at this. I just think it's silly how people are still putting so much faith in the Ethereum blockchain. It just blows my mind. Cognitive dissonance at its finest. And second article out of Cointelegraph. I've reported on this index before, the Fear and Greed Index, but is it time to buy? The article asks. I think so. I came out with a tweet this morning saying that I think 7,400 should be a nice support area, and we're building a base now, but I think 7,400 is a low, and then we'll start heading up from there. But we'll take a quick read of what this article has to say about the Fear Index. It's almost at an all-time high, or low I should say, as far as the fear gauge. I think it's at 12. And the last article is also out of Cointelegraph. Venezuela's central bank is considering holding Bitcoin and Ether. And I just said that Ether probably would become a currency, a type of reserve. I can see that happening, really. And if that's the case, then the price of Ethereum might go up over time if the market starts to perceive that particular asset not as a smart contract platform, but just literally as holding value or transmitting value. So we'll take a look at this. It's pretty big, in my opinion, to see, Venezuela think about holding Bitcoin and Ethereum as reserves. This will be a growing trend. I don't think we'll ever fully get off of a fiat monetary system. They'll just come up with new iterations of it. And I think the next wave of cryptocurrencies will be issued by sovereign nations. And so you'll see them having their own fiat cryptocurrencies. That's what they'll do. Fiat won't go away. As long as governments are in control, we're going to have state-issued currencies. Okay? But what they will do, in my opinion, is do what Venezuela's doing. They'll have a certain percentage of their reserves in a Bitcoin, in an Ethereum, in a Litecoin, possibly, in a variety of cryptocurrencies, and maybe even tokens. But that's what's going to happen, in my opinion. And if even a fraction of reserves are held by some of these countries, that's going to make the demand for a deflationary, finite type of currency. It's going to make that price go up very, very high. So we'll read the details on that article as well. And for the heat map today, Bitcoin down 0.5% to $8,063. We've got Ethereum up 2% though to $167, almost $168 right now. Litecoin is up 2.1% to $55.02. EOS up 1.1% to $2.78. And we've got Binance still taking a beating here. It's down 0.4% to $15.19. And Bitcoin Cash up today 1% to $217.39. So as far as this technical analysis goes, as you can see, we did break below the 83 support range that I have drawn. So I think at this point 74 is in play. We will probably touch that and then head up from there. And ultimately we'll probably see some resistance at this purple trend line. I can extend this outward. So that's where I see us right now. And of course, nothing is guaranteed. At any point, another well sale could come through and we drop below even the 74 area. And if that happens for whatever reason, then the last level is around 6,500, 6,600. Just depends on what exchange you're looking at. But yeah, that's where last resort is at 6,600. So we'll have to see what happens. But remember, the lower we go, you take an absolute drop of 1,000 points. That is a greater percentage at, let's say $6,000 versus if we were at $17,000 and we dropped 1,000 points. So understand that the drops, as far as absolute numbers, will become smaller the further we go down. So a move from where we are right now to even 6,500 is a big move down. So for example, a move from here all the way down to 6,500 is going to be almost 20%, versus if we drop that much up here, it may only be 10%. So just keep that in mind. First article we'll take a look at is out of CryptoVest about this DAI stablecoin hit by Ethereum congestion. It says a volatile ETH market price and an overloaded network led to liquidations in the DeFi contract collaterals, crashing the DAI price. It says the DAI stablecoin briefly lost its dollar peg following collateral liquidations for the clients of DeFi Saver. The decentralized finance tool aggregates Ethereum-based lending and collateralization projects like MakerDAO and Compound, allowing users to control all from one wallet. But the automation process failed to work properly due to Ethereum network overload. Collaterals were liquidated to cover for the extreme movement of Ethereum, which wiped out around 20% of its price in a rapid mid-week crash. The MakerDAO accepts ETH collaterals to issue DAI, but if the ETH price moves too fast, the biting function fires, selling the collaterals and cutting a liquidation fee. DAI currently recovered to $1.01, but just in a day lost most of its supply. DAI recently grew to 89 million tokens, but after the liquidations, supply fell to 79 million coins. And I don't know if you guys know about this, but the ETH network is taken over by one smart contract. I think it's the Fair Win FOMO game, and it is relentlessly buying up blocks and preventing other applications from achieving distributed computation required for their smart contracts. So at peak, the game took as much as 59% of gas, causing the fatal slowdown of transactions for DeFi Saver. Despite the relatively small supply, DAI coins are well distributed within the ecosystem. Maker has plans for expansion to use multiple collaterals and even traditional assets to back the creation of DAI, but the risk for the coin may keep affecting side projects and hurt individual investors. So I'm just sitting here reading this, and I thought about this. I now think I understand why a lot of these projects don't leave Ethereum. Because they're funded by Ethereum. They're funded by Consensus and other VC funds that are kind of birthed out of the whole Ethereum ecosystem. So they're almost forced to continue to develop on Ethereum. This is just my theory. Doesn't mean I don't have any proof of this. Don't know. I'm not that close to that side of the industry like that. But maybe that's what's going on, because it just does not make sense for these projects to continue to develop on Ethereum. But the next article is about this fear and greed index, and it's hit a very low price in recent days. It says that Bitcoin price dropped out of the descending triangle, causing a level of extreme fear to spread throughout the entire crypto market. Bitcoin price remains bearish since the top at 13,800, as the price has been trending downwards in a channel. However, the article poses the question whether or not the price of Bitcoin is overall bearish or only short term. So let's take a look at this index here. It's currently at 12. That's where we are. Very low. Very low. Extreme fear, it says. The Crypto Fear and Greed Index currently shows that there is extreme fear in the market. The index is based on volatility, which is 25% of that. Market momentum and volume, another 25. Social media being 15%. Surveys, 15. Dominance, 10. And trends, 10%. Generally, the index is a good indicator to use in technical analysis as it describes the general sentiment. Currently, the sentiment is extremely fearful, with a number of 12 out of 100. These numbers were only seen during the bearish period from December 2018 to February of 2019, and during the sudden price drop in the middle of August this year. What is important to focus on now is whether this fear is justified or if the macro structure still tends upward. So from a macro view, this is from Trading View, Bitcoin broke down from the descending triangle and could not hold the 21-week exponential moving average, causing the price to drop back down towards the next support zone of 8,000. Losing the 21 weighted moving average led to a retest of the next crucial level at the 100-week moving average. In previous market cycles, the 100 WMA was tested before a significant uptrend started, and so currently the 100 WMA is hovering around 7,800 and still beneath the current price. So if we take a bird's eye view of where we are with Bitcoin, zoom way out, you see that Bitcoin dropped below this 93-9400 area. A significant chain reaction caused the price to rapidly drop immediately towards 8,000. And I told you guys the 83-84 zone was a very strong support area. We touched that maybe 6 or 7 times. So the more times we touch it, the stronger that becomes. And so when the whale sold, it broke that area, and now that area will be very hard to get back above. That's how it normally works. The VPVR indicator, which is the volume profile visible range, shows where high volume levels of support and resistance and the next big orders are placed. This indicator can provide great information during downturns. This indicator can provide great information during drawdowns as it shows the next level of support. So right now the indicator is giving information that the price is resting on a significant block of orders. Breaking upwards could lead towards the next bigger block around 94-9800, and that kind of aligns with my philosophy, because I think 94 is going to be an area of congestion for us to the upside. So we'll have to see what happens there. I'm bearish short term right now, but I'm saying overall, if we break below 64 and we stay below, we actually close below 74-7300, we may be in for a reversal in the overall trend of Bitcoin. And last article, and this is what makes me very bullish about Bitcoin long term, Venezuela central bank is considering holding Bitcoin and Ethereum. It says Venezuela central bank is exploring the possibilities of holding Bitcoin and Ether in its coffers, according to an anonymous source who reportedly have direct insights into the matter. According to a September 26 Bloomberg article, the Central Bank of Venezuela is taking a closer look at whether they have the possibility to store cryptocurrencies. The state-run oil and gas company had requested the central bank look into the matter after the oil producer ran into difficulties receiving payments from international clients due to U.S. sanctions against Venezuela President Nicolas Maduro. The unnamed sources said that the PSDV is looking into transferring Bitcoin and Ether to Venezuela central banks and then have the central institution pay its suppliers in cryptocurrency. This is amazing. So it says, in the hope of overcoming its isolation from global financial systems, the Venezuela Central Bank is reportedly studying proposals that would see cryptocurrencies counted towards the country's internal reserves, which currently sits at around 30-year lows at 7.9 billion. Interesting, I think, very positive news though, and just shows you how Bitcoin can really be used in the real world, not for speculation. Like 98% of us in this market right now is using Bitcoin and cryptos for, but true utility in the financial markets, in commerce. This is what I want to start seeing more of. and you should as well. Leave your thoughts and any questions you have in the comments below. We're going to be doing the first Ask the Block episode this weekend, so stay tuned for that. I've got a lot of questions, so I'm very excited about answering those. And if you ever do have a question, just drop me a question in any of my videos with the hashtag AskCB, and I'll make sure I add it to the queue. And shout out to Moon Lambo and their new website, shopmoonlambo.com. Again, great apparel over there. Make sure you guys get over there and save 10% by using the promo code CryptoBlood10. And that's pretty much it for today, ladies and gents. Happy Friday. Shout out again to G Esperanza on YouTube for that song Blue called Vanity. That's the last one from his list. We're moving on to the next one. Make sure you guys like, share, and subscribe, and click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood. I'm out of here, people. Holla.
Don't keep your enemies and homies on the